$28 range. And in this video, I'm going to show you that it will hit $30 per ounce this week. I'm going to break this down for you. What's going on today is going to push silver to $30. Let's start. This is from an article on Reuters. It says, dollars rally supercharged by diverging U.S. rate outlook. What silver and gold is doing in the past 7 days is just so bizarre. I mean, it's really going against what we expect from gold to do, what we expect silver to do. It's directly related to the value of the dollar. We've seen strong value in the US dollar this past week. We would think that that would bring us a correction, but that's not happening. And when I say correction, I mean gold at this all-time high should drop. Silver at this strong $28 per ounce, it should drop, but it's not. It's not. Precious metals they're doing the unthinkable. They're making everybody's head spin because they're going against the grain. So let's follow this article. This article says, a rally in the US dollar is accelerating as stubborn inflation sows doubts over how aggressively the Federal Reserve will be able to cut rates this year compared to other central banks. There are other central banks that have already cut rates, and the US is showing us, the public, that we were totally wrong. We thought 2024 we'd see some said 5, some said 6 cuts. Now we'll be lucky if we get one, possibly September. If we get one in September, maybe it'll end up with 2 cuts, but really it's looking like maybe December if we're lucky. Now, this article says the US dollar index, which measures the greenback against a basket of 6 major currencies, is up 4.6% this year and stands near its highest levels since early November. It's really going strong, the dollar. The index rose 1.7% last week, its biggest weekly gain since September 2022. Last week I'm telling you, this is so bizarre that the dollar did really well last week and gold kept going up, right? It's supposed to be the opposite. People are supposed to go, when the dollar is strong, historically, typically, people go into treasuries, they pull out of precious metals. That's not at all what we're seeing. Gold broke through 2,400 over the weekend, right? Because it's just breaking all the rules. Let's keep going. The article says the greenback is advancing as market participants grow convinced the Fed will need to leave interest rates at current levels for longer to avoid a potential resurgence of inflation. Last week's stronger than expected consumer price data bolstered that view. Investors late Friday were pricing in just 50 basis points of interest rate cuts in 2024. Futures markets showed compared to 150 basis points priced in at the start of the year. Now, I think what's happening with metals as this dollar stays strong is that people are feeling confident, but they're not feeling confident in other areas where they typically would put their money. And really, the only other area besides this silver that I'm holding, the only other area for a physical asset, a tangible asset, the other option is real estate. And people are not going to real estate. And I think that is really a first part of evidence that silver is going to keep climbing, because it's April, it's almost May, and this should be real estate season, but people are not going to real estate. The mortgage rates are too high. First-time homeowners, the home buyers, they're not going to sign on for a 7% mortgage rate at 30 years. What? No, they're not doing that. Instead, they're going into the other tangible asset. They're going into silver, and that is what's keeping silver strong. It's one of the reasons silver is staying strong. Let's keep going with this article. The article says, by contrast, investors believe some global central banks, including the European Central Bank, the Bank of Canada, and Sweden's bank, could have a freer hand to ease monetary policy. That is a shift from a few months ago, when many believed the Fed would be among the first to cut rates. That's typically our Fed is typically the leader when it comes to this, but people are turning away in Europe, Bank of Canada and Sweden, and they're making their own decisions, because I think a lot of that is, yes, central banks of all of these Western nations, they are tied in a web in a sense, right? Because we're on a global economy and nobody wants to pull the trigger and drop their rates, without everybody else being on board. That being said, this soft landing that we're trying to pull off with this quantitative easing, quantitative tightening, this soft landing we're trying to pull off. It's never been done, and everyone knows this, right? All of these Western nations, they all know that this is new ground, and not only is it new ground, but it's trying to be accomplished. We're trying to accomplish this at a very fast rate, right? This cycle of rate hikes happened so quickly, and now to try to land that is really difficult, and there's a lot of balancing. The article says we had fairly clear path that the Fed would likely be the first actor. This is chief investment officer at an investment management company. The Fed would be the first actor. The data that we have received really does undermine that, though. The article says yield differentials between the U.S. and other economies have widened in recent weeks, contributing to the greenback's rally as higher yields boost the allure of dollar-denominated assets. The 2-year U.S. German bond spread stood at its widest since 2022 late Friday, and that was a day after the European Central Bank signaled it could cut rates as soon as June. So other Western nations are signaling that they're ready to cut, right? They're not going to wait for the U.S. They're going to make their own decision. By the way, if this content is helping you, if you're enjoying this video, please hit the like button, hit subscribe. It really means a lot. It helps me get this information out there. And while these other central banks are making their own decisions and the U.S. is trying to determine what's going on with the soft landing, the general public here in the United States, you and I as silver stackers, we see, yes, the real estate market is not doing what it's supposed to do, right? People are not going in. This is real estate season, and people are not going into real estate because of this large mortgage rate. And people also see that there's uncertainty with two areas: wars raging across the globe. That always makes people go into precious metals, and that shows, right? That's really a big push for gold this past week to continue climbing. People feel uncertain. When people feel uncertain, they go into hard assets, they go into precious metals. So these wars that are raging showed, right? Iran made a move over this weekend on Israel. That makes people feel very uncertain here in the States, and they turn to precious metals. So even though the dollar is going strong, treasuries are going strong, typically that would mean a drop in price for silver, a drop in price for gold. That's not right. The opposite is happening, and it's the struggle with real estate. It's the uncertainty going on with wars, and we have this regional bank issue here in the States where these banks are forced to tighten their lending standards. They're tied in with the commercial real estate mess that's going on with all these changes in office spaces throughout our country. Commercial real estate is really shaking and barely holding on. All those loans are tied into regional banks. Regional banks lost their support, right? About 5 weeks ago, that rug was pulled out from our regional banks. And people see that. They see all this uncertainty. It makes them go into the metals. So gold is absolutely going to continue to climb. This is my opinion. I'm not a financial advisor. I'm just telling you my experience as a silver stacker and what I see going on. I absolutely see gold this week is going to be a strong week for gold again, and silver will follow. So we waited for silver. Remember, when gold first shot up to this record high, we had to wait about 3 weeks for silver. Well, I see silver continuing. I see silver easily going to $30, easily. We'll be in the low 30s before we even know it. You'll be blinking your eyes and we'll be in $31, $32 an ounce. It's still a great time to go on silver. I'm planning on picking up silver this week. I was hoping for a drop. I was hoping for a correction in silver by this Friday. And if it happens, sure, I'm going to pick up silver. But no matter what, I've saved my cash. I've not been buying during this upswing. But I'm ready to pick up some. And again, like this channel is not sponsored by any bullion dealer. I'm telling you my opinion. I'm not like those other silver stacking, gold stacking channels on YouTube where those guys are paid by online bullion dealers. They can't go against their boss. They can't tell their boss, oh, don't buy silver. All last week I was saying don't buy silver. Don't buy it. And I still agree. I think the smart move is to wait for it to drop. But that being said, there are many silver stackers that play the silver to gold ratio and they see that the silver to gold ratio still shows silver to be a strong move and a smart buy to continue to stack while gold rages higher and higher, completely out of our reach, right? But silver is within our reach. So I'm still in. I see by the end of this week, I could absolutely see silver at $30 an ounce, and I'm gonna pick up some silver. I've been waiting. I've got my eye on a 10-ounce bar that has my name on it, and I'm absolutely ready to go in.